Hello, everybody, and welcome to another edition of Bleeding Crypto's live Zoom session. It's Monday, February 17th, and today we are poised to have a really good show. We got special guests with us, ChingasX, who is part of our community and has done some really wonderful stuff in our community, and we are very, very excited to have him here with us. We're going to talk about BTC, talk about the alts, talk about crypto in general, and just get a general consensus into how and what he sees in the market compared to what's going on, compared to what we've learned and how I see it, and see if we can maybe get a new perspective, and maybe we come out to the same targets, maybe we don't, and that's okay. Like we always tell you guys, no two people see the market the same, and it's always good to understand different points of views, and a lot of the times you can, two people have two different methods, but when they end up in the same with the same conclusion, it's pretty interesting because it really shows that we are somewhat in sync, even though we may take different paths. So we're going to start off with just looking at CoinMarketCap briefly, like we normally do, and then we're going to jump into Bitcoin, into our discussion with alts and the market in general. So starting off, we've got the market cap sitting at $285.5 billion. So we did get, about a $15 billion pullback from the high, which we cracked a little bit above 300 billion just a few days ago before we started that correction. 24-hour volume actually has sustained itself pretty well. It's $183.8 billion. Bitcoin dominance is actually pretty steady. It's the same as it was on Friday, 62.1 to the 10th of a decimal. It's been pretty consistent. Now, looking at the top 10, some really good green on the board. Look at Bitcoin Cash SV, 12%. Winner off from the top 10. Definitely is taking the cake today. Good for you guys who have the Bitcoin SV. Ethereum at a second at 5.66%. We've got Bitcoin at minus 1.48%, so not much movement from Bitcoin today. Been kind of, kind of sideways, allowing some of the alts to jump up. Now, is this correction over? Well, we're going to find that out in just a moment, and we're going to take a look at Bitcoin. So let me do this. Let me close that chart out just to get a little bit more processing power. Let me cover Tensor charts really quick to see what some of the market makers are doing, and then we'll jump into Bitcoin. So as of right now, it hasn't changed much for my morning brief. The heat continues to continue to stack up at 8640, and then we've got some lower heat here at the bottom all the way down to about 8,000. We still have that heat up on top, all the way up to 10.3. My takeaway on this is that this heat up here, as we know, the price action likes to gravitate to those yellow bars, which is the most intense heat, is what the largest orders are at. I think this 10.3 is a setup for the shorts, to liquidate shorts, in my opinion. I could be wrong, but I can see a case for us to go up here, knock out those shorts, knock out those leverage shorts, the stop losses, and then continue to bring her down for that correction. A lot of these areas here that are marked on the heat maps actually correlate really well with support and resistance and some of the areas on the fib, which is always really interesting. We always cover that, and it's just amazing how all that stuff lines up. So I'm going to go ahead and close this chart. We're going to jump into Bitcoin, and I'm going to give you guys my perspective, and then I'm going to turn it over to ChingasX, and I want to see what his perspective is. We have not talked about this prior to the past 5 minutes, so it's not like we planned this. So he may say you are absolutely out of your mind, and that's okay. And that's okay, because I'm always learning. I think every month I feel like I become a better trader. I understand more and more. I'm a hell of a lot better trader than I was last year or the year before that. And I'm sure looking forward the next year or two, I really hope I continue to grow, and I hope I continue to become a better trader. And that's all we can do, guys, is just try to be the best that we can be, learn. Don't feel like you have to be right all the time. We're here to learn off each other. And I always welcome new approaches and new ways of looking at the market that will help me. We're all here for one purpose, to make money. And whatever's going to give you that edge, I'll definitely take it. I'll definitely take whatever advice I can get. Now, as of right now, this is our new map starting. I believe we said starting yesterday is when I changed my fibs. Prior to this, we had the fib extension because we're trying to find out what the where she was going to stop. So just to recap a little bit, remember this here was 1.445 on the fib extension. This was 1.618, and our prior chart mentioned that these two here were the tops for me, and I was waiting to see a pullback. It wound up working out at 1.618. I thought it was this one, but we wound up turning around. We got rejected after 2 days of 2.5 days of trying to break through 618, which we couldn't. Now looks like we're coming back down. For me right now, what I would like to see, which actually already happened earlier today, we flipped this resistance area into support. As you can see here, we came down, we bounced off of it. Now, there is a thing going on right now. The market's going up. But remember what I'm always teaching you guys. The gap between the price action and the 9 EMA usually closes. And it happens both ways. Whenever we're going up and we start separating ourselves from the 9 EMA, what always happens? We come down, we check it, and then we continue. It works the same way on the downside. Look how far the price action got to the 9 EMA, and look where we're coming back up to touch it. In my opinion, we're going to touch this one here and continue. If we break the previous swing high, then this will get invalidated, and I will say, okay, you know what? We're not ready for that correction. But like I mentioned to you guys, this to me, let me clean the noise just for a second. When I see this on the weekly, this is not sustainable. This to me needs to correct. We cannot continue to go green, 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 green without some sort of correction. So that's why for now, I am going to be sticking to this chart and this theory that we're going to be coming down at least somewhere inside of this area here. Now, we've got a very key EMA. And as most of you guys know, I really use the EMAs a lot for support and resistance. And I like the 12-hour time chart. The 12 and the 1 hour are the ones that I look at the most. The 12-hour kind of gives us the macro view, and then the 1 hour gives us that micro view. And right here, for me, I would like to see the body of the candle hold the 200 EMA. We may see a wick down here, which would line up with the heat maps, but many times we see wicks that will come back up and the body of the candle will stay here. We know how powerful that 200 EMA is. And what I don't want to see, I don't want to see the price action underneath here, because just as it plays as strong support, it also plays as very, very strong resistance, as you guys have seen from my use of the 200 EMA and the 12-hour time frame. So even though this is a very detailed play out, I'm pretty sure it's not going to happen exactly like this, but this is what I would like to see. And if we get somewhere near it, I'm okay with that. I would like to see a retracement to 618. I think 618 is called the golden ratio for a reason. And if you look to the left and you look at the big moves that Bitcoin has had in the past, 618 is usually a really good area of retracement, and she seems to respect it quite a bit. So this is why and this lines up really well with the 200 EMA for a wick and a candle body up here. If I can see this, I would feel very confident and start taking positions into the alts. Right now, the alts are looking good. I know you guys have been screaming, Ethereum's coming back, Ethereum's coming back. But look at the 9 EMA, look at the 12-hour time frame. We're going up for one reason only. We have to check that 9 EMA, guys. So don't get too excited. If you're scalping, great. There's some good 8%, 12% opportunities for scalping, but be careful with that 9. Take your profit. If we flip it to support, you guys know what I say. Then we have to wait for confirmation. Then we can go ahead and take some positions. But for right now, if you guys are playing it safe, you guys don't have the time to sit behind a computer, I get it. And you guys are looking at the higher time frames. This is what I am looking for. So once we can check the body of the candle on the 200 EMA, we can get a couple of 3 confirmations on that. That would give me the confidence to risk some capital with maybe a 2-3% stop loss at that point. I'll be willing to risk it because I would feel much more comfortable as it met my parameters. And if it drops below, that's fine. I lose, I lose a few percent. I didn't call it right. No big deal. I'll wait for some lower numbers and then continue to do what I do and until it works out. But this is my take right now on the 12-hour time frame. Let me give you my quick take on the 1-hour time frame. And like I said, things are looking nice right now. But this is the key for me. Looking at that 9 EMA. Excuse me. Hold on. Here we go. So right now, actually on the 1-hour time frame, correction. 1-hour time frame, the 50 EMA, which is equivalent to the 9 EMA and the 12-hour time frame, has been the area of rejection. So even though it looks really bullish now, the MACD looks really good, had a nice bullish cross, nice volume on the volume oscillator. I still want to see us past the previous swing high. If we could pass the previous swing high, to me, it would mark the beginning of a reversal. And even though we don't see it on the 12-hour time frame, remember that the 1 hour will, if it becomes bullish enough, it will trickle over. It's going to take some time to trickle over into the higher time frames. And that's why I like looking at the 1-hour time frame for some direction and which way the market's going. So we come up here and we hit this previous swing high and we don't break it, that now becomes, in my book, a double top, and we come back down and we are making, lower low. Right now we're making lower lows, higher, lower highs, lower lows, lower highs, and it looks like that's a pattern that it's been completing on the way down. So right now I'm not getting too excited. Just like I told you guys when this was happening, don't get too excited yet until we pass the previous swing high, and we didn't. And down she went. Now she's repeating the same cycle. And again, I tell you guys, wait for this swing high to break, then we'll get excited. But for now, I think it's just following a pattern as it's correcting. Chingas, I would love to hear your take on it. And like I said, if you think I'm crazy, that's fine. Tell me what I'm doing wrong. And I would love to hear your feedback on it.
Yeah, I mean, everything you said looks good. I have very similar takes on where you're at on the 12-hour. I look at every time frame, but I dial in the daily more often, right, than anything else.
Just do you have a chart that you would like to share?
Yeah, sure.
Okay, let me stop my share here, and if you have your co-host, so you can go ahead and just click on your chart and just hit share, and then you have full control.
Bang, just like that. Look at that.
I started screen sharing. There we go. We see your screen.
You see it? Okay.
Yep.
All right. So on the daily, same deal. We came up to these high levels here. Now for me, right, this was pretty key. This moment right here was 10,540. So on Coinbase, that level, we were short by $18. Wow. And what's interesting about that level is that it's the last major lower high. So let me get rid of that. We'll look at the 14K trend. So 14 down to 64, you know the deal, right? High, low, lower, high, same deal. So as you work your way down the system, if you're going to have a reversal, right, that reversal needs to breach a certain level before you can even get excited about that trend being over. Until the last major lower high gets breached, it's nothing more than a lower high. Now, this, for all intents and purposes, will likely be considered a double top because an $18 range on a $10,000 asset is next to nothing. All right, but that being said, the trend is strong, right? So we had this giant falling wedge that broke north. Everything was good, got retested on that. Everything was fine in that zone. Now, as far as support resistance is concerned, the trend is actually pretty nice. Everything's been holding here. So you got your low side trend. You start right here at 78.60. That level right here was the moment we turned into a micro uptrend. That's the first time we took away this from the bears. So the bears came down, they did this, and they did this. Right? They made that low, and then they made the lower low. At that point here, we had a higher low, but until you breached 78.70, we had nothing. Once we breached that, we started this trend, and now it becomes a micro uptrend. And at this point here, we could see how well this has been respected. So just follow the lines over. Today's 95. that was consolidation under resistance, right? Nothing more than just a test of support. Same thing here. You got a test of support. Now we had these weird wick tests, which are kind of annoying, but we could see them here. Like here's a wick test over. You follow that over, bang, you got your little wick test. Over here, the same thing on the top side, right? We had the wick test down. That created that range for a few days, right? But if you remember this area down here when we came back, right, this was the weekend. This is Friday, came down to the key level. Saturday, we got that little push up on that channel. Sunday, we got the bullish engulfing. So again, like this area right here, we're at that same zone where it's like, well, you had your Friday move, that push into the area of respective, the bear is taking over control. And then you had your Saturday, Sunday. Today was a holiday in America, so you have President's Day. So you're losing your very heavy whale traders, right? Most of those guys came from Forex. You know, this is kind of like a hobby for them, but they're in that Forex mentality, right? Monday through Friday, that's a wrap. They don't trade on the weekends. And why would you, right? With the kind of volatility we've seen on weekend trading, you know, you can respect that logic. Now, when we throw fibs in here, not fibs, when we throw the moving averages in here, daily loves that 200, right? A lot of old school traders say, look, anything above the 200 and you're in a bull market, you go long. Anything below the 200, right, and you're going short. Otherwise, you're counter trend trading. But the deal with the 200 here is the break and no retest. Now, if we throw the 200 EMA on, we could see we got the retest. So you got the break right here. Just follow the pattern. It's the same. Push up, consolidate under resistance, break it, find the next major level of resistance, pull back, retest that same level. Now we have the break up top, the 200, come up, make a new high, looking for the pullback back to the 200. I'm not concerned about this level, right? 8850, 8900, 9000. That's no big deal for me if you want to continue this move. Now, this move did get tired, right? It got weak. You lost strength in the move. We could tell by the way the push to the next new high became, right? So you got a nice push up, a little pullback, no big deal. Nice push up, consolidate under resistance, retest structure highs. Nice push up, right? Three white soldiers up, consolidate under resistance, kind of a half little test, a wick check there, not great. But this run here, very weak. Very weak. One good candle, barely getting over local resistance, and then 3 days of basically sideways, spinning top, indecision type candles until we finally get the sandwich pattern over here, or the burger, right, where you got one up, one down, one up. You complete that cycle, but the top, right, shooting star up top gives us nothing. No motivation and no pull through, right? No follow through from the bulls to capture that moment of momentum. And when you break it down and it comes right to that level, right to that last high, well, then it becomes a sticking point. Now, fib-wise, right, you got the 5 right here. 50%, we all know it, right? We all know it's not a fib, but we all know high for 14, down to 64, 50%, that's a win, right? That shows exhaustion or at least time to correct in a lot of trends. Now we take our fib over here and we say, all right, well, this was our first high, right? And that was our first major low. Then we look to the 423 for exhaustion. It's right there, 10,388. It's exhausted, right? It's time to just come back a little bit. Now, the one problem here when it comes to this trend, as far as whether it's going to kick back at 95. Now, look, 95 structure, right? We can't deny that that's structure top, structure top, structure top. Come back down. We got the perfect test today, structure top. But here's the thing. We lost to 9. We lost to 20. The last time we had the same structure retest, we did the same thing. We lost to 9. We lost to 20. The 20 is the red, by the way, and the 9 is the black. You'll see them over here on the right. So we lost it, but we only lost it for 1 day. Then we got the bullish engulfing. That came up, 3 white soldiers. That gave us our next new high. The thing about this, the magnet here still comes to the 200. The idea that the 200 is not going to get retested only happened once in a prior cycle, and that was this move over here when everybody kicked themselves, myself included. As I know, we all had orders at 42, 40, 48, 5,000, right? This level getting broken here, right, and not getting retested still burns me, as we broke the 200 and just never, ever, ever came back. So it can happen, right? And that's the thing to remember with every trading currency, but specifically Bitcoin. Anything can happen. The way I see it now is that last lower high, that 10,540 mark, that's kind of a big deal. The make or break for me is come down to 200 and lose it. If you lose it, I can make a fairly compelling story that brings it down back into the 55s. I did a whole thesis on it, the whole 9 yards, but to sum it up super quick.
I'm sorry, Chingas, did you say 55 or 65?
Like 55, 58. It would be it would be between the 113 and the 127 of this move, which puts us right here. 113 is 58.97. 127 is 53.16. Somewhere in that ballpark. Now in the past, in history, I don't have it up right now. But in the past, in history, we could see the motivation behind that is that green line and the orange line. The green line is the 350-day simple. The orange line is the 200 simple. We only get a handful of crosses in Bitcoin's lifetime. And that's because, 350-day, obviously it's going to take 350 days, almost a year before it ever shows up on the chart. And our oldest chart, which includes Mt. Gox, goes BLX. And I like to chart a lot the old stuff on Stamp, because Stamp is still... it's still an American exchange that it's about half the liquid and half the overall trading volume of Coinbase, but it's still relevant. Old schoolers are still on there trading. Now, you're talking, 130, 140 million dollars is still 130, 140 million dollars. It's not, 50 grand. That being said, we make a high. Right? We come down, we test at 350, we push up to the 200, and then at that point we break down and we end up doing a 113, 127 off of this last move. From there, unfortunately, we get the cross under, 200 crosses under the 350, and we end up painting a lower low. Now that's only happened one other time. So with the with the data to support something like that is kind of rough. And of course, it's not on Coinbase, it's on my Stamp chart. But make a long story short, I can make that compelling statement if we break the 200. But the 200 is strong. There's no reason for the 200 to break in one shot. We have a 5,200 crossover imminent. The 50 is strong. The 200 is getting. Now we know these are lagging indicators, but it's a golden cross. Again, you only get a handful of golden crosses, once in a blue moon. So you get your death cross that we got over here. That was your cycle shot. That dropped us down to the low. And now we're looking to make the bullish side of that, the golden cross. So there's a lot of factors that could take it up into the next realm. And the next realm, you and I are right here, right? 618. I want to see something at 11,000 as far as a bigger correction would make sense. Now, if we get rid of all this junk and we say, well, what about the major swing fail? Right? Today, that's sitting around 12,000, 11.8, 11.9. That's another fantastic area to pull back, but that would be a major pullback somewhere back to the tune of where you have your targets back at 82. So we could play this a lot of different ways, but similar to you, level by level, and moving average by moving average, you lose the 20, the first thing you have to do is get the 20 back, right? The bulls have just attempted that, and they just got rejected. Now, same thing with the daily and the 9. I use the 9 all the time. The 9 maintains, right, the strength of the trend. Once you lose the 9, you come to the 20. If you lose the 20, well, then you're looking for a bigger correction. If you can hold the 20, then you simply regain the 9, and you're right back to where you left off. Now, the interesting thing about this rising wedge, though, local rising wedge, nothing super crazy, but, like every other pattern, you draw it on, you get the mouth, you get your measured move. If you break it, we did break it. We broke it right about here, and that comes right about down, right into that level of structure. Now that's the 382 on the local move. So the local move being, 64.30 up to about 10.5, give or take, this local high, pushing down 382 level. Now, if you have a very strong trend, right, 382 to a 5 are acceptable pullbacks for continuation and keeping that trend strong. If you don't have a super strong trend, I'm right there with you between a 5 and a 618, or even on alts, you know the deal, right? 706, 786, 886, right? I mean, they don't care. They look like they're going straight into the bloodbath, and then you get an 886 or a 786 or a 706, and it just spikes 20%. Bitcoin, a little bit more conservative. Bitcoin loves the 618. And we can see that clearly just by this move. Well, not clearly on this messy chart, but bang, all-time high, 2018 low, push up to the top 14K, 618. It's right there. All you got to do is zoom out and you'll see those bigger plays always seem to make sense. You got that low side, right, at 3K. You got the high side at 14. This drop down right here, 706. Right? Mm-hmm. All that body action was here at the 618, all that congestion that we saw over and over and over again. The 706 caught that low. So those fibs work, and they've been working for Bitcoin for, I don't know, the last 3 years. You look at the chart, they're pretty convincing. So for me, it's watching the daily level by level. I'll look at the 12, I look at the 6, the 4, the 1, and then I intra on the 15, and then I scalp the 135. So I watch all time frames, but each one has their own kind of like set rules of, where that next major level is going to look, or what looks really good in comparison. But I focus a lot on this as well. This is dominance right here. So dominance has key levels, right? We had 14 days straight down. That's a party for the alts all day long. And then we had a nice push up the last 2 days, but look at that rejection level right here, both days. So when dominance is dropping like that, and these are old trends, but they are holding their own at the moment, we got a couple key levels we can come back to. But if dominance is going to continue to drop, then there's no reason to think that the alts aren't going to come out and play at least a little while longer. But that gives Bitcoin the opportunity to kind of relax. Mm-hmm. And so while no one's really watching, everybody's partying with Bitcoin, no one's watching, coming back down and having the bears control that move down to the 200, that's fine. Now, just like you, that 95, that's the first stop. That's the first stop. This is obvious support. That's a quick scalp play. You buy that 95 all day long. Likely, I would have already been out because I would have probably sold at the 20. Which we pushed up to right here today. So, a lot of good moves on the lower time frames. I know ETH is cruising at the moment. XRP had a couple really good moves. SV's cruising. But these alts are taking dominance away from Bitcoin, which is allowing Bitcoin kind of that little reprieve that it wants. The idea here, though, is if we hold, if the buying really is true and we don't get rejected, then the next level for me really comes back to that 618. And I'd like to see 11.0, and I'd like to see strong selling. I'd like to see the 618 actually give us the correction that we would like, and a healthy correction. A nice, deep 30, 40% correction, drop it back down to these levels, back into the 89, 9,000, even back down to the 2-3 at 81, right? 81, 85, 8,200. These are perfectly acceptable levels without freaking out the market. The problem is retail panics. So we get a move down here, and we could see violence come right to 89, only because people are panic selling. Oh, we lost 95. They don't understand that there's a level right here and it's perfectly acceptable. The deal is, for me, if panic comes in such a rush that momentum takes over, then I think we lose the two. We don't get that big, massive buyback. And if we don't get the big, massive buyback, well, then the fear will end up pushing it lower and lower and lower. Next thing you know, we're losing we're losing our structure level 1, structure level 2. We're back to where the trend started. And that becomes a big problem for a lot of people. Now, you think like a whale or think like a maker. Everybody in the world is looking at 95. Everybody was looking at the 200, or at least this area over here at 9K. You know where the liquidity's at. That's a problem, right? That's one problem with this market. Like, you don't get that in Forex. You know what I mean? You get it. You get it in traditionals with the stocks like Nvidia and AMD and Tesla and Google and Amazon, like, you know, the big movers. But in crypto, everybody shows their hand, which is really bizarre. Like, the worst poker players in the world are all sitting here saying, I'm buying this level. The only thing you're doing, you're telling every maker and every whale in the world where all of the liquidity is at. You're saying,
that's exactly what I tell my guys every time. They're showing their hand. They know exactly what you're playing.
You're saying, like, hey, guys, I got a ton of liquidity here. If you guys want to sell anywhere between $100 and $300 million, I got your back. I know how hard that is to get rid of a bag that big. Now, this move up here is brilliant, right? Because that's the retest right on this rising wedge. So a rising wedge structure breaks to the low side, expect the retest. Retest right here is that same level you were talking about, 10,200, 10,300, and then rip it down. Why? Because there's a ton of liquidity right here. And that's right where you get all the masses that are saying, oh, we broke it, we're in, let's go. And everyone's like, let's go to the moon, let's go to the moon, let's go to the moon. All you did was just fill all of those short bags so that they can pull it down to wherever they want. You know how hard it is to get an order filled for 10 million contracts, 20 million contracts, 100 million contracts? That can't be an easy task. And if you ever want to know how difficult it is, go find the crappiest coin in the world with the lowest liquidity and put $1,000 on there and see how hard it is to actually get your orders filled when there's no liquidity and there's nobody there, when the biggest orders there are $10 and $20. Now you're the whale, and now you have to think like the whale. How can I possibly get these orders filled unless I juice this community up and tell them, buy it, buy it, buy it, buy it. It's going to be great. It's going to be great. It's going to be great. And then you sell to those people. These makers and these whales in crypto, they don't even have to do that. Everybody shows their hand. They already tell them, yeah, we're coming up. We're coming up. I'm buying this all day long. I'm buying this all day long. Okay, well, this guy's doing the math in his head and saying, I don't know about you guys, but I bought at 7,000. All right, well, I could just as easily sell all of those orders right over here and still make a good profit at 9K because now I have people to sell to. You know, and that's one great thing about Tensor. The other guy, I forgot his name, but there's a handful of heat maps out there that are really good because they show you, unfortunately, they only show you what they want you to see, right? You can, you know, you could spoof an order any day of the week if you had the liquidity to do it, but it's still, it's a mind game where they say, okay, the heat is here, the heat is here, the heat is here, meaning price will normally gravitate to that area because you have liquid there, you have interest there. There's a reason to go up there. It's not to continue going up.
That's right.
It's to sell, to go down. But it seems like a simple concept that I think it gets like twisted or bent or it just becomes confusing because I get it. Inside of a run, everybody wants this to be the bull run. And I get it. I'm with you. You know, Bitcoin to 30K, Bitcoin to 75. I'm down. But you got to be responsible about it, right? If it's not going to make it in this run, this is nothing more than another failed rally. Another failed rally is due for a correction, and if that correction can't find support on previous structure levels, well, then you make another lower low. Now, I don't know what River is going to say about 1K. I mean, I could say 42 all day long just because this level never got retested. Yeah. And 2,900, if you remember, 29.9 was actually a major level. I think it was back here somewhere, was the major level. And we could basically say it got hit at 31.22. I'm not worried about that. These levels down here make sense at 13. But again, these are this is during a run that had significant pullbacks. They just didn't have the pullbacks that we're used to seeing because this was a different market in 2016. These were different traders in 2016. Half of these guys are gone. Right? They don't trade anymore. The bigger dogs came in. These guys probably aren't them. But that's a beautiful, huge push. Drop it down right to the 200. Keep the trend going. Right here, you got a structure retest, right? But that's not always the case. This is a really good look, good push, came back, support structure. This is done in my book. You don't ever have to come back to 735. Why would you? You come back up again, you drop it back down, you test 200, previous structure gets hit, you're all good. There's no reason to come back down here. Now, this is likely what she's looking at. This zone right here never got retested. So you got 1200, 1300, good push up, broke those levels, right, and never respected the retest. Your retest came down to 1757. And if we're just talking support resistance, then I would be looking at that as well. But you have to be somewhat realistic. It's possible when we were at 20K, people weren't thinking 3.
But it's such a different market now. Like you said, there's so much more to Bitcoin than just a bunch of nerds behind the computer in the black way. It's very different. This has gone mainstream already. This isn't mainstream. You know, we've got bankers, investments, we've got futures. I cannot fathom that the market makers would kill the trend of Bitcoin. And even though a handful of us hardcores would buy at 1,000, I think many people would walk away. I think many people would walk away because a handful of people would buy at 1,000, like myself and you, and I'm sure everybody in Discord, it doesn't mean the majority are going to do that. If they couldn't even handle a drop to 3,000, and a lot of people walked away. What do you think is going to happen to the psychology at 1,000?
It's a delicate ecosystem, but if you go back, there's a website dedicated to how many times Bitcoin was pronounced dead.
Yes.
And it's like, I don't know, it's like over 2,000. Yeah, it's crazy.
Yeah,
it's crazy.
99 something, yeah.
And that website really does remind us as traders, really anything is possible. You know, the run to 20K was so euphoric. There was just so much activity going on in this zone. I mean, grandmothers were asking their grandkids, what is this Bitcoin thing? Mainstream media was covering Bitcoin like it was an asset traded at the stock exchange in New York. I mean, it was the most unheard of and unrealized asset, not even an asset, because we couldn't even get regulation on it in 2017. So the amount that it pushed past maybe what the people trading were thinking were respectable levels. You know, like when Tesla shoots up from 500 to 1,000, you know, people are like, it's Tesla. Okay, but it's also a 2X in the traditional market, right? It's not exactly normal, right? So when we see it here, we say, okay, well, this is a fairly respectable level, 3,000. It pulls all the way down to 17. It's almost a 50% drop. And then the next major high is like 5,000. Like, wow, like that's like a 70% increase, right? That's huge. And then you pull back down again to, you know, you lose 2,000, right? So you gain 3, you lose 2, or gain 2, you lose 2. And when that happened, everyone got excited, and they got higher and higher and higher and higher and higher. But when that hit, you know, December 17th, when that hit, it wasn't like in a year we'll be at 3K. You know, I mean, I looked at this chart, same as you, man. We're probably thousands of hours deep just on the Bitcoin chart alone. And that's a lot of time to look at the same candles. But when I go back and I sort of look at how it all went down, you know, all the exits we had, all the opportunities we had to lose less, it becomes such a good learning experience to say, you know, revisit these candles, and better yet, like block them out. You know what I mean? Like I'll take like a big square over here, and I'll just block them out. I'll just make them black. You know, I just go like this, and I'll make it all black, and I'll be like, all right, I can't see anything. right? And then I'll try to like work my way down the list, and I'll be like, all right, what would I have done today? You know, when I hit these levels, what makes the most sense? Say, all right, well, that's a new all-time high, and that's a spinning top. All right, there's indecision in the market. The next candle is a hanging man, basically telling me, okay, the market has been exhausted for now, but I got to look back at this. Well, we had a high here. We had 2 candles down. Everything came back on the 9. So I'd be watching.
Top. Perfect double top.
Yeah, you know, so now I'm watching the 9, right? Oh, we got support at the 9. Okay, that's good. Then we ripped right through the 20, but then we got the 20 back, but then we lost the 20. And then we hit 5,800 on a wick. And it's like, okay, at this point, if you're not at least in tune to I'm getting out at the next high, then you're gonna make the same mistake next time, right? This is a test wick. We all know it. We've seen them time and time and time again. Those super long wicks are testing liquidity pools down there, seeing who's out there. How can these big players actually exit their positions when they're holding so much and nobody wants to sell, right? Or nobody wants to buy. I'm sorry, nobody wants to buy, and all they want to do is sell. So then you got that push up, and you got that back test of the 20. And that would have been the moment where I said, okay, I'm out for now. Now, again, at 16 and change, we were at 20. It's a $4,000 loss in price. It's a heavy hit, but hopefully I was out. I was in on that pullback. You know what I mean? Pullback to the 50, got good move, got the 20 and the 9 back. Okay, I'm back in the market here at a slight loss off that all-time high, right? But it's those things when we're here, when we're in the moment and we're looking at the daily chart or the 12-hour chart or the 4-hour chart or the 15-minute chart. When we're in that moment.
That's a great way to look at it. That's a great way to look at it.
We always fail to recognize the most obvious things that are right in front of us. We made a high. We lost the high. The high was a major level. It failed at that level. It found rejection. We lost a 9. We lost a 20. It's like replaying all over again. If we had a massive wick down to the 200 and we failed to get the 20 back, man, I'm short all day long, right? Just based off of, creating that same situation where I don't want to be sitting at this rally failure, swing fail, come back up, fail to make another high and create a lower low. And now I'm looking at it like we're at 9,000. We were just at 20. How did I not sell? You know what I mean? Like,
yep.
How am I still holding this position, which now is getting close to my entry, right? So that's what I try to find is the what would I have done if I looked at this on a blank canvas and never seen it before, and it wasn't Bitcoin, and it wasn't Ethereum, and it wasn't Zcash, or Chili or whatever that one is, right? If it was livestock, right? Or if it was wheat or soybeans, what would this tell me? I see levels being respected. There's no reason for me to think this won't continue until. And what is that until? What are those invalidation points that I could say enough is enough? It's not continuing for now. My thesis needs to change because it's been invalidated. And that's what I set up mentally on a daily basis is just what are my invalidation points for this current move? Right, and this move right now found support. You can't deny 95 was tested. We got a good buyback. All is good, right? But at the end of the day, we're still under the 20. Now, were we under the 20 in this trend, in this specific uptrend? Yes, for one day, and we got it right back on a bullish engulfing. We broke the 20, we reclaimed the 9, and we're back in business. Fine. If we get something similar, I'm back in business, and my next target is the 618, right? However, if we don't, and the 20 holds, or if we push up to that 10-2 mark on the rising wedge and fail, well, likely I'm short to the 200. And that's my next major level of support. We got good confluence here from structure levels. We never came back to retest. the structure. We never came back to retest the 200. And I like that level. That level makes sense for a lot of reasons. It's not just these 2 points of interest. It's also the rising wedge measured moved south. It's also the local 382. It's also previous structure 618. That's the high 10.5 to the local low, right? All those things all come up and they all seem to have confluence at that same zone. And if that zone holds, then I'm a buyer. And again, I'm looking for the 618. That doesn't change. If, however, it doesn't, well, then I have a lot of good reasons to think that we come down lower. Now, your level here at 82 is fantastic. And it would line up with the 350 if it comes very quickly. And that could be a very, very, very good level of support. But I think a lot will have to do with the reaction at the 200. Like I was saying before, if the momentum is south and the market sentiment is fear, then I don't think we stand a chance holding that level. I think it'll be, market-wide sell-off and people are going to freak. Not that 9K is any psychological level, but I think it just holds weight with the 200. And I think a lot of people put weight in crossing the 200. And this is when I started hearing, you remember, the end of January was like, we're going to 20K. We're going to 20K. And I'm like, all right, guys, let's just take it one level at a time.
Yeah. I love the way you explain this, because the way you explained it, the examples you used, the fibs, your MAs, which are different than the EMAs, your 350 that you have that I don't even have, line up to almost the exact same thing that I was talking about earlier, which brings back to my point when I said in the beginning of the show, that different people can see the market differently or can explain it differently, can use different tools. But it's nice to see that when you show up with the same result at the end of the day, it kind of gives you that confirmation that, you know what, you're not crazy. You are seeing something there, that you're not the only one.
Right.
There's a question that one of our members has. He wants to get your input on what you think about the halvening and what impact it'll have with the market.
Yeah, so the halvening super interesting. I'm in the middle of this analysis that I'm trying to dive a little bit deeper into what the halvening has done in the past. These are the 2 prior halvening dates, July 9th, 2016, and November 28th, 2012. Now, going back to what we were saying before, trading from 2010 to 2016 is very hard to justify that data set because things are just so different now. But, it's a 10-year asset. We only have that data. We might as well use it, right? So whatever we got, we'll use, and I'll just put a little less weight into maybe that analysis back here. But for example, on the 12 halvening, where everyone seems to think, or at least the mindset from what I'm understanding is the second we have or prior to the halve, we skyrocket. It's just not the case, not what I'm seeing. This is the halvening date. This is essentially the prior action. We had a nice rally up. It took us 153 days to make a new high. That was a prior high to the halvening. Right, so from that high through the halvening was 153 days. From the halvening to breaking that high was 50 days, but that's still a month and a half away. So if we're looking May 12th, right, you figure the rest of May, all of June, right, now you're looking sometime in July is where you may be seeing something like this. It's a fantastic rally that we could see. 30-day mark, right, nothing. 60-day mark, you're in, right? You're in, you broke previous structure highs. Like, this is very much, I wouldn't say it's parabolic at the moment. I'd have to measure it, but I mean, this is a strong,
this is beautiful. I don't know about you, but that
unsustainable
looks
trend.
beautiful to me.
I mean, it's fantastic. It's fantastic.
I'm doing the math in my head. My L, my link, and my E. What? Oh,
I mean,
man.
it's really nice. It's really nice. Now, the second happening, which I would put a lot more weight into, I think a lot more people were educated on the happening. A lot more people understood that it was coming. There were more miners that were now engaged in the market. Pools became a bigger thing. Just the market in general was more exposed to Bitcoin than it was, back in 2012. So now we have another high, right? Another high prior to the rally. Now that's about 25 something days, 25, 30 days from June 18th. And let's see, our happening was July 16th. So we'll call it just shy of a month. From that high to the next high, to the next break of something that we already had prior to the happening was 181 days.
Wow. Half the year.
That level. And you got to remember, if you look at it like this and say, okay, well, this is 14K, right? And this is 6,400, let's just say. And we're now at the happening. It's a 30% drop, 27.36% drop after the happening, right? This is 24 days later. We had a 30% drop, which then took, right, 105 days just to get back to the halving level, or the halving level, just to get back to that level. And then it was an additional 74 or so days, right, just to make it to a previous high that we already had. Now, at this point here, this is an all-time high, so this would be more attuned to, oh, that's not an all-time high. So this is more of our 14K. That's more of our
20K. Yep.
Right,
Yep,
if you want to put it into perspective of where we currently are. All right, and then we get to this halving here, which is approximately May 12th, 13th. It's, every 210,000 blocks. So the idea here is, very simple. We're in a rally at the moment. That rally is facing major resistance, not only on daily, but on weekly and monthly levels. Do we come back, sort of ride out? Now, remember, these logarithmic trends, these have been holding since, literally day one, which is kind of wild, but, we breached a little here and there. It's nothing super crazy, but it is, it's something to be mindful of, coming down to that level, right? And then working our way up into
where's 1K? Where's 1K there?
1,000 is
I don't think
on my chart. It's down here. Yeah, it would look wildly out of place. It would look pretty out of place. As far as lows here that we could go, that we could justify just using this, we'd probably measure the distance here, how far away we actually were. Now this is a breach, and again, on the smaller time scale, it's hard to even justify what it is, but it's a 4% move. So, let's modify that and say anywhere between a 4 and a 6 just to play safe. Let's say that happened today, right? Which is unrealistic, but it could. So let's say we went down 4% from there, and you're looking at
still
low,
at 7,000, still 7,000.
Low side 7,000 at 6%. You'd be looking around 6,800, right? So even my thesis of coming back and making that lower low off the 350-200 cross, right at 58, wouldn't even really be supported by this, this longer play. And those are things you have to keep in mind when you make a thesis. How realistic is it actually? And, it's not the most realistic, but data supports it. The problem is that the data is very light, right? There's just, again, there's just not a lot of data. That one is, I believe I did it on, so that's this right here. So, I'll just show you the prior example. This is exactly what I'm looking at as a potential. And this isn't out of the realm of possibility because we've done it before. Here's your high, here's your low. I got to put the 350 back on so it makes a little bit more sense. We'll dump that on here, and the 200. So I'll just do the 350, the 200. We'll get rid of the 50 for now. And all that is you had a high, you come down, you found support at the 350, 350 came up to the 200, got rejected, dropped back down, wiggled around that 350 a little bit, and there's your 113,127 that I was talking about right now.
Mm-hmm.
Now you got to bounce back up, but then you get the cross under, right? 200 cross under the 350, and holy cow, there you go, you got a new low. Now, the only other time in history that this happened that we could even take a look at is this zone all the way back here. And again, old school trading back to 2014, but look at the similarities. Here's your high, here's your low, 350 kick, push up 200, right at the 382, got that move, dropped it back down, rolled the 200 for a little while, right? And then you got the cross under, drop, there's your 113,127 mix. What did that do? Got yourself another new low, right? So when I started going back and seeing that, I'm like, well, wait a second, this is kind of looking a little bit similar here, and it's not all that different. We don't interact with that 350 all that often. There's your high, there's your low, here's your 350. Now, granted, this is very, very, very sloppy, but a push up nonetheless. Here's your 200 reaction. We pushed to the 3.8 and the 2.3, but we got way higher than we did on the other two examples. What we did do here on Stamp that we didn't do on any other exchange was breach that previous lower high. This is 10,350, which is far lower, more conservative than Coinbase, BitMEX, Bybit, all combined at 10,550, 10,540. I think even BLX was 10,440 in that ballpark, right? So that's the only major difference. On Coinbase, we did not hit that level, but then we pushed back down, looking for that push, looking really for that cross under, 200 cross under the 200. And then this is a projected zone over here at the 1112, which would sort of support this trend, this overall trend here, which is unconfirmed. It's only 2 touches. So you need one more touch to validate that trend. And that would end up pushing into a larger symmetrical triangle, which then gives you that consolidation, that longer term consolidation off the major move. Swing, fail, hold, trend on the bottom, symmetrical triangle, and then you look for the breakout to the upside or downside, breakdown to the downside, which would be bad. This level here would be the halvening. So that level pushes down, kind of creeps us right into the halvening, pushes back up, and then we get rally on break, and the break would then come back down and sort of retest that longer trend right here, the swing fail from 20 to 14. So, again, like I like theses, or I like kind of.
What's my favorite part about that chart? Can you go back to that chart real quick?
Yeah.
My favorite thing about this chart, that when I look at it, there's a lot of information. It looks really awesome, and it makes me feel smart because I get it. I mean, I would have never been able to come up with this shit. Never in a million years will my chart look like this. But I feel like call my wife and go, babe, I get this shit. I feel so good about myself right now, man. Thank you. Thank you. I feel like doing push-ups. Look, Texas Crypto Guy says, yeah, it makes me feel smart too. We're all like, wow, this is so cool. I love that chart. And it totally makes sense. I love that long trend line from day one that you just showed. That's amazing how we haven't broke that trend line.
Oh, and yeah, the log one is crazy.
Yes, and how that lines up, the bottom of that touch would line up with what we've been talking about. That's what's crazy. Everything, the confluence is just amazing.
You're talking on Bitstamp, you got data back to 2011, late 2011. We could put this on BLX, which is, that still has data from Mt. Gox. Right. Yeah. And that'll support, just look at it, right? I'll get rid of these moving averages. So you can see it a little bit cleaner.
What a great thesis, man. It just it supports everything.
The median line is good, well respected to the point where you get a bit of a reaction out of it. But really, like, the high side is very nice. The low side's very nice. You can fib out this whole thing. So you could fib in between each one of these as they move parallel from one another. Now it's, obviously, like, no market, right, can just go straight up. So it does have a curvature to it where it is decreasing in its exponential increases, if that makes sense. So,
yes.
from like a few years ago, it was like a a 7,000% move up from one halving to the next. And then after that, it was like a 2,000% increase, which makes sense. You know, if we had 7,000 at the levels we were at 2016, right? They would put price at like, you know, whatever, 300,000. It's just like a little too. I'm not saying we can't get there, but you know, a little. Let's take our time a little bit.
Yeah, one step, baby steps, baby, baby steps.
Yeah, everybody's trying to accumulate. You know what I mean? We're not ready. We're not ready yet.
Learn support and resistance before you become an Elliott waiver, basically.
Right. Yeah, let's get some of the basics out of the way.
Yeah, that's right. Man, this is awesome, bro. This is awesome. Can you give me your and I know everybody's dying to ask, Ethereum.
Oh, no.
Can you give me your take on Ethereum?
ETH right now?
Yeah.
I think I have.
And then let me give you my take, because I might have to crush some dreams right now.
Let me see.
Some short-term dreams, better said.
Oh, I have
I'm seeing too much bullishness going on. Look at you, no BC.
ETH USD. I think I got a Coinbase chart on here somewhere. Let's see. Yeah. Okay. So ETH is super interesting. Now, ETH BTC is a very different animal compared to ETH USD, but this is an ETH USD chart. And it shows a couple really, you know, similar things to Bitcoin. This is our low side, breach, push up. We dropped this kind of internal trend line over here, which was nice to break. Again, this level over here, the 200, and let me clean this up a little bit. So this 200 never really got retested, which is not, it's a big deal, but it's not the biggest deal. What I like about Ethereum here is the rise in volume with the rise in price, which is definitely showing there's interest in Ethereum at the moment. If we do break down, I'll definitely keep my eyes on that 200 as something to sort of think about. But when we go back to just the chart and just, you know, straight up support resistance, these moves are very, very, very well respected. If we look at just the last major move, right? The last major move, that's this high all the way up here, 1,400, all the way down to $80, right? We never even made it to the 236. Never made it back to the 236. That's just a 23% retrace from your high to your low, from the scale of 14 down to 80, which is kind of a big deal. To not make that shows that there's very weak hands holding this trend. Now, remember, everything we're doing here is based off of this trend, right? We're only just recovering from this trend. And we know that we can measure that one out. I believe it was an 886. I'll double check real quick. So that pullback that we're riding on right now is nothing more than just another fib that we were looking at prior. So that, yeah, it was an 886 almost on the nose. So if we look at that fib from the low to the high, right, we just pull it over so you can see the numbers a little bit easier. We look down at the 886, bang, there's your buy-in if you didn't already buy the 7.8, right? So anyway, that move came up strong, right? But we had to break a ton of levels just to get there. Now, the interesting thing about this is we saw exhaustion right at the 618, where price pushed up, false break, came to right to the 706, right to the nose, and then dropped all the way back down to the 5. Now, today we are still sitting under the 618. If you can't make that set, the 7.8 for me is the mark for continuation. In other words, any rally, any small rally, and this would still be considered a small rally in the grand scheme of things, but any rally that can't breach the 7.8 will likely fall and either make a lower low or a double bottom or an 886. You know, you got to, in other words, a pretty deep fallback, a pretty deep pullback. If you breach the 7.8, well, that's when we start looking at, all right, let's get the 1-1. Let's work on the 1-2, the 1-1-3, the 1-4, the 1-6-1-8. Ideally, the 1-6-1-8 being the big target, right? That's the real winner. You know, at the 7-0, we got a hit. We pull back, we hit the 5. We push back up right to the 6. Okay, it's not horrible at the moment. As long as the trend continues, right? If we fight the 618 and fail, well, then we got a lot of good levels underneath. Historically, this structure level would probably be my best friend at 192. We got decent levels at 200, but I think that's more psychological than anything else. But this structure level to me says, hey, you know, we broke it clean and we never came back. We got that big, wide open candle with no sort of, no, hey, you know what? We broke you nice and now we're not going to play with you no more. I like coming back to those levels on deeper pullbacks. That lines up just above the 618. So similar to the chart you were looking at before, where on your Bitcoin chart, where you said maybe the body over here and a wick down to here, I would be 100% okay with bodies chilling in the 194 zone with a wick down to 182 and see that reaction. If there's a ton of buying, then I'm in. And then I'll rally back up and still look for that 786. If, however, at that point we drop, then I'm looking at this move right here. And everything for me changes as I'll line up the 6-1 from the high, and now I have a new 786 that I'd be looking for, which just so happens to also be perfect confirmation on structure levels. So I would be looking at that at the moment. I'm not a fan of like, I won't buy resistance. I won't buy this. I'll wait for it to break through, close above, come back. I'll buy the retest, but I'll never buy resistance, just like I'll never sell support. There's just no reason to. You're counter trading yourself. If you want to, if you're the aggressive type of trader who tries to get into the trade before everybody else, and I don't mean a front run, I mean like you're buying this in hopes that you'll break this. I mean, I've been burnt far too many times than I care to recollect, to the point where I had to come up with a rule that I just won't do it anymore.
Yep. Yeah, that was why I was asking. I just saw a few comments on my Discord today that gave me the impression that people are trying to long it from here. And that and Yaz is making a comment. Oh, there goes a dream killer. I'm not a dream killer. I'm a reality checker. That's my new name, reality checker. So, I mean, if you're going to scalp short term, okay, I get it. I see the opportunity to scalp because, again, we're pulling away from the 9 EMA on the way down. We're going to go up to meet it. Good opportunities. But for those that sometimes what happens is I've got some members that are not really scalping like one of our members, Yaz. He's really good at that, and he does really well doing that. But sometimes I think that other people read into that and they go in not with the intention that he is about scalping it, but looking to long. And I don't think we're there yet. I think right now the only opportunities, if you wanted to spend the time behind the charts, we have that opportunity to go up to the 9 and then get out of it. But I think longing is very dangerous at this stage, and pretty much for the same reasons you just gave, same exact levels. Different ways I got there, but pretty much the same way that you were explaining. I think it's just too dangerous. We're at resistance. We're barely starting to pull back. There's no time to be longing, just scalping. For me, in my opinion, scalping right now, not longing.
There's a difference. So there's a difference here where we can easily say, like, pick any zone, this one, or this one. You got 4 in the series going up, where you could say, okay, we are clearly consolidating under major resistance. The major resistance at that point was the 200 EMA, 81.95, 81.95. That also lined up with, I believe, the 236. Might have been the all-time high 236, 20K down to 3. But in any event, we were definitely consolidating. You knew by like the 3rd day, 4th day, you know, we're consolidating on here. We're sort of just getting, like you said, we're getting back to the 9. When I explain the 9, I'm like, look, it's a magnet to the price or a price to the magnet, right? The 9's, the price is either going to sit there and do jack until you get to the 9, or the price is going to come straight down to it and just to check it. But either way, they're going to talk. They need to. So at this point here, the way I explain major levels of support breakouts and major levels of support breakdowns and major levels of resistance breakouts, I try to paint the picture of like chipping glass or standing on a giant sheet of ice. And the more you chip away and chip away and chip away and chip away, it'll eventually break. Now, these areas, if somebody wants to go long early here with a tight stop under the 9, I'm okay with that move, only because You're pushing and pushing and pushing and pushing and pushing and pushing, and you're expecting the volatility. If you get it, great. The only reason why I allow that is that the 9 acts as my savior, right? So if I'm out fast, okay, I was wrong. Trade's invalidated, and I'm out. No big deal, right? But if you're buying like this candle, right? Let's say you buy the 5th candle in, which tells you, okay, look, we came up, we hit the 200, we came down, we found support at the 9, we pushed back up and got resistance again over here. I'm going to buy the open of the next candle and my thesis is going to be we're going to push up to the next major level of resistance, which is going to be the 200 DMA, and I'll allow that anything under the 9 is going to invalidate that, meaning that, okay, this whole thing broke down, and now we're back down to the 20 and then the 50, yada, yada, yada. So you buy the open of this candle, you push up, one more day of resistance, no big deal. Then you get another day that doesn't do much, and then you're in on the 8% move, the 9% move up. You don't sell just yet. You wait for another 1, 2, 3, 4, 5 days. There you go, right? The trade's complete. You hit your level, you got your mark. But almost any other time, I would be very hesitant to buy resistance, especially on resistance in a market that hasn't shown its complete hand yet. Ethereum looks great, sure, but Ethereum hasn't exactly shown its full-on hand, meaning when you go back to the weekly chart and you say, okay, we're looking pretty strong here, but failure to breach a major level, I'm not exactly buying this just yet. If we're going to spend 5, 6, 7, 8 days under it, okay. Then I might buy it with a tight stop under the 9 and say, look, it's pushing on this level. It's pushing on this level. Chances are, based off of probabilities, we're going to breach it. And if we breach it, then I'm selling at the 786 and I'm out. And that's the end of that trade. And then I'll move on to the next trade. If it's only a one-day thing and then we pull back down and now we're back at the 382, I'm not buying that because I don't have any confidence that we're actually pushing on the 6-1. To me, that says the 6-1 super strong. And the daily is showing, well, as far as right now, it's holding, right? You got a false break. False break is like a liquidity check. You kind of want to know like what's going on up there so that they can reassess the situation and bring more manpower up. How are we gonna maintain these levels? The bears came in and were like, get the hell out of here with that junk. Came all the way back to the 5, right? They got no business being up there. So the deal is, all right, well, we'll try it again. And we'll try it again. And if they're going to sit here for another 3, 4, 5, 6 days, okay, I'll give it a shot. I'll throw the 9 back on. Likely, I would do it on the 4-hour chart. I wouldn't necessarily do it on the daily, but I would keep in mind what levels were important. I say, okay, very simple. Here's my 2, 3. Here's my 9. I put a stop under that, wide stop, which means my position size will likely be pretty small on the trade, having such a large stop loss, but you know, it's worth taking that trade as long as my risk remains, 1% in that ballpark, then I'll take it. Volatility push, all right, take profit at 7.8, either close out the whole trade or allow it to ride from there. But chances are you hit that, you'll likely come back, retest structure, come back up, and then you start working the 127, the 14, the 1618. But you got this major 236 here, which is just looming in the distance, not to mention the high over here, which is a little bit more important than normal because it didn't fail on any major level. This failed on the market. The market failed. The rally failed to hit the 2-3. So this level, this 364, is not as arbitrary as it seems, but it's far more important. And mostly you got confluence over here. So you know, okay, something happened in the past at that level that people liked. And they really liked. I mean, it's perfect, right? So you have to justify that going up to a double top. Am I really going to hold a position through a double top? Or am I going to allow that double top to drop back down, show its hand, and then maybe buy that pullback? If it's something like an Adam and Eve, where you expect the breakthrough first, or like a W pattern where you expect the breakthrough and then the pull, and you kind of double dip that trade. You get the push through, then you get the short, and then you get the rebuy. So it's like 3 trades in one, right? It's like, it doesn't get much better than that.
That's one of my sayings, W flag breakout, W flag. We see that over and over and over again. And
I know.
I'm always training my guys to, you just, when you see a chart within 5 seconds, you should be able to look at that, look at the setup, know exactly.
Yeah.
When you can do that, I think you really will have a much better understanding. But those are very obvious patterns that come up so much. And I love playing those. I love those W's.
W's are fantastic. Now, I measure my W from the low leg. Like this would have been a failed W for me, but I measure from the lowest leg up to essentially the neck, right? And then that's my go line, and then I'm pushing up to the top side. But then you get the breakthrough, you get the pullback, and then you rebuy that. So you could, like, if this one played out, it's such a great pattern. This is a horrible example, but if it did play out, it's this right here. You buy this, you push up right here. You're going to break through that 9 out of 10, right? So you get that long, you short to the next major level, you come right back to support, and then you push beyond. It's one of those patterns that, I don't know, not a lot of people talk about, but I mean, they are so good. You know, when they play, they're fantastic. And easy in validation, right? Super easy in validation.
Yes.
You break this level, it's going. Right? And if it doesn't go, you get this. You get exactly this. You get a wick up, and then you get ranged out and another lower low. That's all.
Yeah.
You know, you're out of the trade. Who cares? You move on.
That's kind of what I'm looking at for Link. If you look at the weekly chart, Link just completed a perfect W. She's starting to do the pullback for the flag. So that's what I'm looking for. I'm looking for that entry on Link off the W and that pullback. Yeah, look at that.
Jesus.
Beautiful.
Yeah.
Look at that, beautiful.
So this actually, so that was the breach. We didn't get the 1-6, I don't think, on that. I think we were looking for the 1-2. Let me see if we actually got it here. I know my chart's super messy. Let's see. That's the level I'm looking for on an ABCD off of that higher move. This trend, were you playing that trend? Because that trend was hilarious.
I was in and out. I didn't play the entire thing, but I was in and out on a lot of links. Sometimes it would leave me behind. Sometimes I would catch it. But I was basically playing the some of it, not all of it. Some of my members just bought it from the bottom and just held it all the way up. I kept on getting in and out. I played this last one from the low because I was screaming that when it hits $1.69. I had two levels. It was $1.69 and really close to each other. And I actually did a really big trade up until we failed. I took 30% off of that. Had I held, I would have had a free position. But unfortunately, my position size was bigger than it should have been. And I got really freaking, I'm sure you've been there. I got really super nervous. And I saw what I had already as virtual profits, fake profits. I said, you know what, let me make these a reality. And that's okay because I'm happy. I made a couple of dollars on it, so I was happy with it. But I haven't caught the latest pump. I've been completely out of it, which is why I'm watching it closely because I love Link. I think Link is an amazing. I've seen this thing go. One of our members, Texas crypto guy, was screaming to us when Link was like 50 cents. He was I think it was back in 2018, and we just seen, because of him, we'd seen the growth of Link, through the years, and it's just amazing. And because of him, I think almost the entire community plays Link.
Wow. Yeah, Link's one of my favorites to trade. The charts are clean, the levels are nice. Things seem to be fairly well respected. This run up here was so good. I remember hopping out early. We hit that high over here, and I was like, I don't know, 60 cents is good. We haven't seen any higher before that. And I think I took the 161 off of here, or possibly the 4.2.
Yeah, I didn't play any of that. I missed all of that. I got into it already. Yeah, no, I didn't get any of that. I got into it when it was already above $1. And then I started playing with that. I'm like, you know what? I got to pay attention to this, to this coin. But no, he wrote it. I did it.
Link's a great chart. These levels, these old levels, this 2618, this 423 exhaustion level, like they all held. The 26 came back. It's just a really good chart. It really respects fibs. I don't know who's trading it, but I love those traders because they're seeing all the same things I am.
Yeah. So those fibs are amazing. I'm always showing my guys off of a fib examples because it still gets me excited to see how well. And I like the way you go back And I'm always telling my guys, look to the left, back test them, check it out,
Yeah.
because they hold true. They hold true.
Yeah, it's like for me, one impulse or one major move, something that you could clearly say is a trend, that to me deserves to be measured. And then you're going to measure it out. You're going to look for resistance on the way up, or you're going to measure the push up to the down, and you're going to measure levels of support on the way down. But each one, they'll come back because they still play a pivotal role, because if it worked the first time, then it becomes structure. And once it's structure, it's historical. And when it's historical, it's on the chart for life, right? It's never going to go away. And you're going to interact with those levels time and time again. These extension levels.
I think I lost you, Chingas. I lost the audio. I don't know if, can anybody else hear Chingas, or is it just me? Darth, can you hear him? No, you can't hear him. Okay, I lost him as well.
Oh, there we go. I'm back.
Okay, yeah, I can hear you now. Okay.
I don't know what happened.
All right, yeah, everybody says you're back. Okay.
But yeah, I like Link. I like Link a lot. This chart's fantastic to trade. The next major move I'm looking for is right here. It's an ABCD move, nothing super crazy. 40% rip though from the bottom half. And
I don't see your chart anymore.
Oh,
I think you have to I think you have to reshare. Yeah.
Okay, no problem.
We got bumped out a little bit.
There we go. That should be back.
See, I have like the prior fibs. I'm always putting them on just to compare, but I take it off because I find it that it's a little bit easier when you're trying to teach somebody who doesn't understand the fibs. When you have too many on the chart, it gets a little confusing. I try to put myself in their shoes when I first started learning. Mr. Mo has very similar charts to you, where he has a lot of information, and I get it. Like, I see it now and I completely get it. I understand it, but I think sometimes it becomes intimidating and a little bit overwhelming. So I try to keep it as simple as possible. But I love the way you have all those prior fibs, because they really do cross each other as time goes by. They continue, like you said, they're constant. They're constant. And they keep on checking each other's levels off. And I think it's a great way to view the market once you understand how fibs work. But I think it may be just a little confusing when you're in the position where you're trying to teach them how to use it. I don't want them to feel overwhelmed on it. But I love your charts, man. I love seeing that right there. That's awesome. That's awesome.
Yeah, it becomes it becomes confusing for me. I constantly use like the hide button, and I constantly delete. I'll delete everything, and then I'll just use the back button. I'll draw. Draw. I'll be like, okay, this is what I'm looking at, blah blah blah, and then when I'm done, I'm like, all right, let me get my stuff back.
Yeah.
I'll tell you what I've learned just over the last few years, which is a pretty good practice. I've done it, I don't know, probably a dozen times now. I'll get to my chart and I'll have all my marks of all my key levels, for example, the link, right? I've deleted a ton of stuff over the last 8 months, 9 months. But at some point, I'm just going to do this, and I'm just going to start fresh. Absolutely 100% fresh. No old information on here, and whatever I see goes, right? And that clears my mind completely if I'm being persuaded by my own old analysis. I want my today analysis. And I do that with Bitcoin on the regular. This is an older chart, and I've gone this, I don't know, this has been redone 5 or 6 times. This is my old stamp chart, and then this is my Coinbase chart. But I've redone this probably 4 or 5 times just in the last 6 months. Since 14K, I've probably done it 4 or 5 times. And I've had levels like you wouldn't believe, and fans. I've had pitchforks. I've had GAN boxes. I got one over here that's a total nightmare that I'll probably never be able to delete. But this goes into like GAN and GAN boxes and like time theory and all that jazz. But it just took too long.
Okay,
And
now
then
I feel
I'll
dumb
redo it.
again. Now I feel dumb again. Can you put that other chart you had earlier where it made me feel smart? Because that one just made me feel really dumb. I just went right back down. What a way to bring me back down to earth.
No. You're smart. You got it. You're smart. But what I like to do is just get rid of it all. It's like spring cleaning. Now a lot of these are going to come back on, right? This all-time high fib to 2018 low, it'll always be there. But I'll delete it. I'll put it back. Maybe I'll freshen up the colors. I don't know. But what it does is it just forces you to think back, right? And then justify the reason for putting it there in the first place. Because if after a few months, right, you just don't use it, or you just don't need it, like these lines down here, the next time through, I'll probably get rid of them. You know, maybe they're not relevant anymore. They worked a little bit here. You had some rejection over here and a little support on the way up. But you know what? It's kind of like going through your garage a year later and saying, I don't know what this thing is, but I haven't used it in a year. Maybe I should just get rid of it. You're not going to miss it. And if it's important enough, it'll be on the chart. You'll put it back. But it forces your brain to think about it instead of just loading the chart and being like, I don't have to think about this fib. I already have it there. I don't have to think about that falling wedge. I already have it. But you know what? Today, I might draw it slightly different than I did 3 months ago. And maybe I'll draw it in a way that makes a little bit more sense. Or maybe I'll discover something I didn't see last time, and there's no reason for me to go back here because I already have everything done. But once I'm clean, shit.
Yep. That's why I said in the beginning of the show, that's why I said that 1 12-hour chart is my new one. Because I'll run it for a while, but then, like I mentioned before, it just gets, I feel like it gets too cluttered. So I'll start fresh, and there's a new fib, because now I feel like we're in a new position we're going to be correcting. So I want to know where we're going to land without so much noise and interference. And if I'm proven wrong and the previous chart is still validated, then it's just one chart I have to take off and then put the other fib back on with the extension, and we'll continue that chart. But I totally understand what you mean. It really does give you a little bit fresher perspective of what's going on in the now, instead of having so much of what already happened.
Yeah, exactly. So sometimes it's just I look at this and I look at it all day, every day, right? So it's like I'm used to it. But that being said, I don't need to go back and redo these levels, because these levels they're just always there. They're still relevant. They're gonna be relevant until we breach and we're in beyond 14. I don't really need them then, but I need them right now. But the idea is, I'm going to look at this slightly differently. And I know you're like me, man. Every single day you try to learn something new.
Yes.
And you may not be able to fit that new idea in with all of this excess junk. You may need something clean to say, all right, well, I would do that. All right, so my new idea is more like breach, come back down with an impulse move, but breach a key structure level. And then I'm going to do a fib-based or a trend-based fib extension instead of a regular fib, right? And you can't just throw that on your chart with all your other stuff. It would just never make sense. But on a clean chart, you can.
Yep. Well, man, look, I really, really appreciate all the time you've taken to explain this to all of us, and the time to sit here and answer all of our questions, man. I appreciate you so much, and I'm sure everybody in our Discord appreciates you as well, man. You've always been such just a fountain of information. I definitely you showed me stuff that I haven't seen before, that I haven't taken the time to really map out, like the previous happenings and the impact and the date ranges. I love using date ranges. I use that a lot on my TA, because it just helps you to put things into perspective. Because I always tell my guys, you guys are in a hurry. The market is not. The market is in no hurry whatsoever. So a lot of times when you use that date stamp, it really puts things into perspective. How long sometimes we stay in consolidation mode. Sometimes it's 70, 80 days until we finally make a move. And that's just the way, that's just the way it is. But definitely appreciate you so much. Would love to have you back again sometime soon if you can fit in your schedule.
Yeah, of course. I love it, man. Your community is so awesome, man. And I don't think I'm not. I'm always lurking, man. Just because I'm not typing in there. I'm always seeing what you guys are doing and what you guys are talking about. And I've seen so many people grow just over the last year. Seeing a lot of people like their charts are just getting, and I know I'm like, that's Bleeding and Mr. Mo, just like ripping it. Like, come on, guys.
Thank you. I appreciate that.
So, it's really, really, really awesome. I love it. You guys are a huge family. I get to see all your projects when you're working on them.
Yes. I have my kids that I posted on Instagram. I didn't post that on Discord. I had them doing some woodworking today. I had my grandkids all day, so I was showing them how to stain wood and do all that stuff. So it's it's definitely it's very rewarding, and being able to do this and spend so much time with my family. It really is just an amazing experience I've had in the past 3 years being involved with crypto. It really has changed my life. And just amazing. That's
the goal. Like, I don't want to get into a super long conversation, but I'm sure you've drilled it down to your people. It's like pro traders don't trade all day, every day. That's the point, right? The point is that you're able to execute a handful of trades and still be able to make it, right? That's the goal. Like you're different because you're an educator. So you have to like that. That's what you do. But when people are striving to be, I think they lose sight of the now, right? The now is conditioning yourself so that you have that time later. But don't feel like you can't take a weekend here or there. The market goes nowhere, right? The market.
Do you hear that, guys? You hear that? I tell them on the weekend, almost every weekend, Chingas, I'm telling you, dude, take the weekend out. Exactly what you just said.
It's here.
The market is going nowhere.
It's here. It's here. And trust me, like, they're not going to miss you. You know what I'm saying? And look, like, weekend trading, we know is suspect. It always, and it's like, you just had, let's say you had a good week, right? You just got some pretty good gains. You want to give them all back on some random, volatility wick candle on a Saturday or a Sunday? Why? The idea is this is one market. This is crypto. This is huge. You also have Forex, traditionals, options. You got CFDs. You got futures. You got the whole 9 yards. So if you understand the fundamentals now, you can apply those in every market. And that's where, like, TA becomes so important, but it shouldn't suffocate you. It shouldn't kill you. You know what I mean? Like, I have all the respect in the world for anybody that puts in the time and effort to learn. And trust me, there is a lot to learn, and I'm nowhere even close to knowing what I want to know. And that being said, it's like, I did spend the first 2-3 years just nonstop. But looking back, I could have probably spread that out over like 10 years.
Yeah.
Probably would have been okay. But the idea is, look, you take the trades when you can, but over trading becomes its own habit that you need to break down the road. And that's a tough one as well. So, you miss a trade here or there, it's fine.
Big deal. I know. Yeah.
Market's not going nowhere. Like, I'll look, we were looking at that other move. I'll allow a coin that's in reversal. I'll allow a 25% move to the upside just to pull back before I even buy in on confirmation. I'm not worried about that 25%. When the move up to the 236 is 300%, I mean, come on. At that point, it's like, execute the best quality trade you possibly can with the least amount of risk. And if you could do that consistently, well, I mean, you should be fine. You should be fine.
Yep. And just do what I do. When I missed Link a couple of weeks ago, missed the big push, I close my computer, I go on a corner, I rock in the fetal position for a few minutes, and I'm over it. and I'm over it. I'm done. I move on to my next coin, and there you go. I make it up.
I can picture it because I do it myself. I go outside and I'll go have a cigar and I'll just sit there in silence like,
yeah.
I made the same mistake again, which means I need 2 Post-it notes that say stop buying tops. You know?
Yeah. And that was a difficult one for me in the beginning is not buying those tops, thinking it's not going to come down. And I think what saved me the most is those fibs, learning the fibs and the fib extensions, and knowing when a fib extension is complete, it's pretty close to the top. It's pretty close to the top. And yeah, sometimes it'll break. Like we were following a chart that I made on Ethereum. It actually broke a little bit above the completion of the extension, but then we came right back down. So
right.
I could go a little bit higher, but and people were screaming to buy, and I'm like, no. But
I've done it.
Yes, I've done it. Yes. Well, Chingas, again, thank you so much.
Yeah, of course. Thank you.
Awesome.
Thank you.
And to my members, guys, tomorrow, I know I told you guys today we would study fibs. We're going to say that for tomorrow's show. I was talking to Chingas at the last minute today. I invited him on the show. Which I'm sure you guys would much rather see that than learning about fibs some more from me. But so tomorrow, guys, we will talk about that. We'll cover every single alt. I'll even do that in my morning brief tomorrow morning when I wake up. I'll cover the majority of the stuff that I was going to cover today in the morning. And then this way, whatever questions you have, let me know during the day if you can't make it to the live Zoom session, and I'll make sure that I'll answer them on tomorrow's Zoom session. So in the morning, I'm going to go over it. We don't understand, let me know, and I will cover it so that you guys can then listen to the recording and we can all learn something. Thank you again, Chingas. Thank you, guys.
Yeah, thank you.
Have a really good night.